Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we're taking a look at why I just sold out of MRK. I just closed out my entire position, and I want to go through why I did this with all of you. It came onto my radar. I was scrolling through my portfolio, wanting to trim down some positions a little bit, and I saw that I was up over 30%. So I started to dig into the numbers, and I figured I might want to sell. So we don't even need to really get into the earnings that they had recently. I pulled the important numbers over here. So they don't hit the revenue growth that we like to see. Their guidance, they're looking at a bit of a pullback in revenue this year. So it's going to be a negative year on that front. Earnings per share on the high end, they're expecting $5.97. And that's only 4% growth when they've been putting up massive numbers recently. They had a decline from 2019 to 2020, just like most companies did. But coming back from that, they hopped right back on trend, growing over 10% year over year, which is what we like to see. And that it makes me question my holding with that growth slowing down. The share count, they've been buying back slowly, and their free cash flow, I'm just projecting this out based on their typical yield of about 20%. So we see a bit of a decline in there. They had a great year this last year with their free cash flow. Their assets, I'm just projecting out off of their typical performance. And we come down to these valuations down here after everything is said and done. And what we end up with is a forward fair value of $104.12, which it's up above slightly at the moment. It's trading right around $110 a share. So it's $6 over that fair value, 0.5% above. But if you're a true value investor, you like to buy your stocks 15 to 20% below the fair value and then sell them once you're in $30 profit, and 30% profit, excuse me. And so our sell target going forward would be $108 if we were able to get in around that $83 mark. I initiated my position, my average cost was 82. So to me, if this was a value play, which I believe it was, now would be the time to sell. We're seeing declines in revenue, decline in the growth of their earnings. So I've gotten what I've wanted out of the stock. I'll jump back out, keep an eye on it, of course, and maybe at some point later I get in, definitely when it goes under $100 if it were to do so, or the fundamentals catch back up to the price of the. They were a decent dividend payer, and also I feel like my portfolio is really heavy in pharmaceuticals, and so I wanted to trim some back. I sold out of AbbVie after we discussed it. I gave it a hold, but personally I sold because I thought it was a little overvalued, but there wasn't really the red flags to sell it. It's gone down 8% since then. So I might look at moving some of this money back into AbbVie, because Merck's at a high, AbbVie's at a low. I can stay in the same industry, just revolving around the different stocks, and hopefully get gains there too. I'd have to look deeper into that. I actually took the money from this, and I am holding some of it cash, but I put about half of it into Realty Income because I want that monthly cash flow. It's down at a good price. I like the stock, and I'm trying to build up to 100 share position so I can start hedging my bets on that one. But this one's going to be a little interesting. So we've looked at why I'm getting out, but I want to show you guys the chart in a little bit of a different way than I typically do, because I graphed all of my buys and sells for this stock. So these greens are our typical markers: buy, fair value, and then sell. This green is actually where the stock price currently sits. The purple is all the times that I bought the stock, and the red is every time that I sold out of the stock. So we can look through this and see I first bought in March of 2020, which if you buy anything at that time, you're probably up on it. And I didn't buy a whole lot. I bought again 2 months later. And then throughout 2021, I was just buying the crap out of this thing. It was going down and I was buying more and more and more as it went down. And this is what I tell you guys is find a fair value, find a range that you like the stock in, and just buy it every time it dips into it. We see it just somehow worked out that buy line was basically my personal line. Looks like the highest that I really ended up buying was $80 down in this range. So anytime that it poked up above 80, I'd just sit and wait. And once it went back below, I'd buy. And it went down even lower, I'd buy. And I ended up accumulating quite a few shares throughout this process. And then I first sold some of the stock in mid 2022. And this was probably a really bad sell. I honestly don't know what I was thinking. I was probably just trying to free up some capital for other positions that I was looking to initiate. I thought $80 was a good price on the stock, and I was buying it up below that. And the fact that it had hit a peak in the mid 90s and was crashing back down, I probably thought, hey, let me get some of this money out. And then hopefully it'll go back down to the 80s and I can just buy the same amount back up. Well, if you look, it never went back down into the 80s. It bounced off and went right back up to the hundreds. And then we see I had more sells. I had a few buys in here in this mid-range, and I can explain that. Actually, if you look at my history on the stock, you can probably tell why. There were quite a few dividends. I collected a significant amount of dividends off of this company because I held it for quite some time. I was getting a few dollars a month. The last time I got paid was $3 because I had been trimming my position down. Let's see. I'm looking at my sheet right now, and I collected $88 in dividends off of this company. And between dividends, capital gains, and options trades, I made over $700 off of this stock. So you can see here, when I wasn't buying, I was speculating. And there's like option order, call credit spread, call credit spread, call credit spread, call credit spread, just a series. Well, those were all canceled, but here's one that I actually got filled. Here's one that got filled. And I wasn't wanting to buy more shares, but I did want to speculate on the direction of the stock. And so a lot of what I was doing is I'd make $14, $20, and I'd put half of it into shares. And then the other half I'd keep in cash or go to a different investment. And that's my strategy when I first started options. I would try and hedge my bets. I feel, to me, it's better to be doing call credit spreads and put credit spreads, because if it's a position I already hold, I'm just hedging my downside, and I'm not hoping that the market is going to stay above a certain level. I'm hoping that it's not going to go above a certain level, which just seems to be easier to me. The market has a lot of psychology in it. And so if there's a large move to the downside, which tends to be more likely than a large move to the upside, it can continue going down as people get scared and pull their money out. So that's the history. I mean, we can scroll through all of this and see. Right after I stopped buying up all my shares, I started to speculate on the direction. I didn't really buy a whole lot more. So if we go back to that chart, we see that I hit another wave of selling right around that $100 level, because I didn't think that the stock was worth $100. This was in early 2022. So at that time, we can see what the fair value price was. In early 2022, we'd be moving off the 2021 numbers. Yeah, so I was coming up with a fair value of around $90 and a buy zone of 71, a sell of 92. So I was selling at the sell zone. I could have projected out the numbers forward and realized that the stock could climb higher. I mean, it went from 91, almost 92 to, wrong number. It went from 88 and a half to 101 to 104 is the forward projection. So that's why I'm starting to project stuff out. I didn't do this in the past. I was just like, let me find a fair value. I'm going to buy it at its fair value. And now the more I read, the more I see from super investors, I realize that margin of safety, the 15 to 20% below the fair value, is really what you're looking for to get in. And then you can get out at 30% gains, because at that point it's above the fair value. You have to reevaluate before you get out, though, because it could have been something like this. I was selling out those shares, but the stock was still growing, so I missed out on $10 to $20 per share, and that sucks. Hopefully I found better opportunities with that money, but I could have held until now, and now I think is a good time to sell. With the reevaluation, revenues down, earnings per share is slowing, market is, well, the stock is starting to top in its charts. I think it's the perfect storm for me to get out, but I'll keep following it and see if it goes for another run. And if it does, that sucks, but at least I made the money that I did, and I got out when I felt was the right time. So we continue on. I had a series of sells. Anytime that it hit $100, I was selling, and then I was speculating on the price. When it got up here, I did a whole lot of call credit spreads. I stopped doing options after one of them gave me a loss in November of last year. I lost $68 on the trade, so nothing massive, but it was this run in here where it broke above $100, and I probably, knowing myself, placed a bet that it would have trouble breaking $100, but it zoomed right through it. So I lost $60 or $68. And in total off options, I made $218 on this stock. I can keep speculating on the direction. I could open a call credit spread today, because we see a solid top at that $118 level, and it's starting a downtrend. It's above its fair value. So I'm sure that unless something changes with their drugs, something gets approval, they're probably headed back to 105, somewhere around there, maybe even lower. Today, we see the price right here, and I am selling out. It's right above the sell zone, and I think I've gotten what I've wanted out of the stock for now. So hopefully this explains to you guys at least my approach to investing, more of a value approach. And you can see when to pick up some shares and when to sell. And if it's in between ranges, you can speculate on the price a little bit. I mean, that's what I did here. I was able to squeeze out a few $100, $700 off of all of this, which I'd say is a decent return for a stock that is $110. I basically got 7 shares for free out of it. I want to thank you guys for watching. Let me know if you want me to do more of this. Anytime I sell a stock, I could do this for you guys, just to give a view of when I was buying stuff, what the heck's going on with it. Let me know if there's any other stocks you'd like me to analyze, any earnings coming up, or that I missed on stocks that you hold or you wish to hold. And I'll catch you guys next time.